Eat, sleep, trade, repeat. This shirt wrinkle. Oh well. All right. This is another trade breakdown from this morning on EUR USD. This was a sale. Basically, what I saw, you had the Asian range right here. Asian range, Asian mid, this point here. You can kind of already see it's pretty much an equal measured move. Asian range, London push price up, New York push the price right back down. And I got in on the 15. This is why. So New York session open. Let me zoom in. Right here, this big bullish candle is the opening on New York. This is 7 o'clock. And when I looked at this, the first thing that I saw was, first of all, this is an impulse move to get people to buy. And you got to look at it like this. If you sold the market, let me pull up my arrow. If you sold the market, like right here, thinking price was going to go down, and it eventually did. But let's just say you sold there and you saw it come back up. You sold there. Oops, that ain't what I want. Need my arrow. And let's just say you sold there and then you sold here. Oh, sold anywhere up here. The point is, if you sold in this area, then you got a stop loss somewhere up in here. Try to sell, stop loss up here. So the whole purpose of this candle is to push price up. It does a couple things. It's a fake out to get people to buy. It's like FOMO. You see this candle, oh, let me hurry up and buy before the market shoots up. So it's the fake out to get people to buy, but it also is to hit the stop loss of the people that sold here, and you got stops here. And when I saw that, I knew exactly what was going on. And then to back that up, you had rejection. Because at one point, this red candle was a blue candle all the way up here. Then the market pushed back down. And on the 5-minute time frame, you actually had a little better entry, because look here. You got so you got this engulfing candle, then you got an order block. Usually when you get this order block, price would push up into the order block, or at least give you about 50% of this engulfing candle. It didn't quite hit 50%, but it did give you a little retracement in the push up. So if you would have hopped in, let's say you got in at the closing of this engulfing candle. So you sold here, you would have had basically a 2 pip drawdown with a 6 pip stop loss. And this trade played out, I think, what was this, 37 pips? Let's see. So you got in here 35 pips. So you risk 6 pips to make 35 with a 2 pip drawdown. That's like a 1 to 5. Let's see. So entry here, take profit here, and your stop loss would have been right above this little wick. So that's a 1 to 5. It's actually a 5.6. We can just say 1 to 5. This is a good risk to reward. This is a good trade, really good trade. And I mean, it was a pretty simple setup. Once you know what you're looking for, it sticks out. It really sticks out. And it'll definitely give you more confidence in your trading. I think I jumped in on four positions. I have a screen recording on this video somewhere. But this the same $44 account. So this account was $44. I doubled it in one day. I got it to 88. And then the next day I had it up to 140. And I didn't close the trade out. I got greedy. And yeah, US 30 made me pay. So I started this account back at $68 today. I think it was at like 88. I don't know. I'm gonna put the screen recording on the on this video so y'all can see. But yeah, this was a pretty simple setup. Nothing special. And I think this was my markup from last night. Take this off. Now, I don't know what this is gonna do now. It could continue to go up, or it may shoot down. I don't know for sure yet. Just gotta wait and see. And what I'm trading, so I'm trading the market maker method. If y'all don't know about that, you gotta look into it. Man, it's good stuff. It's good stuff. I'm not really using support and resistance, trend lines, moving averages, Fibonacci's. I ain't using none of that. I'm just looking at the cycles and the counts of the market. So, and from what I've been taught, 3 is really the magic number. 3 pushes to the upside, 3 pushes to the downside. Not always, but 3 is really the magic number. And this is, where is that at? Okay. This is a cycle here. Show y'all. So this on the 4-hour time frame. You got one push, second push up. Oops, ain't what I want. And third push up. So 1, 2, 3. And I'm trading off the second leg of the M or the W for the most part. You can kind of see, how much time I'm at? 10 minutes? Damn, I ain't trying to make this video that long. But you can see this came off a peak low formation. You had 1 push, 2 push, 3 push. Usually the second leg of the M, you'll see the market come back down. But in this case, what it did, it was a bullish reset. So instead of the market coming back down, it just went into the reset and continued up. And then, come on, bro. And once again, 1 push, 2 push, 3 push. And once again, it didn't drop. It looks like it's going back into a reset to continue up, possibly. I don't know yet. But yeah, this was the breakdown. EU. Pretty simple setup. EUR. Thought I had that marked up. There we go. So that's all it was. Asian range. London made the impulse move, the false move. Not saying you can't trade this. You can definitely trade this to the upside. But the thing is, with New York session, you get some type of target to where your take profit is. Because let's just say you bought during the New York session. I mean, during the London session. So if you would have bought this move, you really have no way of knowing when to get out. And you can try to use New York session as a guide, because New York does usually reverse what London does. Not all the time, but most of the time. But the advantage of trading New York, you kind of have a footprint or a guideline as to where to set your take profit. And you can see this white line is the Asian mid, and look where the market came. Pretty much back to the Asian mid. That would have been your take profit. So that's that's the trade breakdown. Man, this video way longer than what I wanted it to be, but there you go. That's the forex market for you.